Still watching the countdown markets. Mehraboon Irani from Central Broking joins us as well. Mehraboon, afternoon. How are you calling markets from here on?
Well, I think, Rahul, what is very amusing to me is the way that people are asking us to, do you feel this rally will sustain itself? I think I always stated this, Rahul, and I want to record on this, that why are we trying to time the markets? The factors, macro factors were negative. Everybody was discussing with it. In fact, even the man on the street was knowing oil prices have gone up. Not many were able to explain as to what happens if oil prices go up. But the fact is things were negative, but the fact is things that also come down too sharply. And I always believe in the simple maxim, buy when you see blood on the streets. I personally feel bargain valuations are attractive, are available only in challenging times. So after the markets have gone up 20%, people still calling it a dead cat bounce, people are still calling it a relief rally, and I think possibly if we see some more fresh money coming in, oil prices coming down a little bit further, market goes up further from here, then possibly people will start believing themselves, and then when the market falls down, people will again blame the market. It's sad. The fact is, whenever markets come down, there are opportunities. We always believed in that, and I personally feel trying to call on the indices is foolhardy. I've always mentioned that, Rahul. And again, I feel that at the present moment, yes, interest is sensitive to the way they've gone up in the last 2 or 3 days. Giving a call on them right now would be a little bit difficult, but my simple advice to everybody is to take a view. The view is that if you see oil at 110 or 105 one side, and if you see oil, say, back to 130, 135 on the other side, I think accordingly take an exposure in those interest rate sensitive stocks, because they had come down too sharply. Now they have gone up a little bit too sharply. Giving a call on them in the short run would be very, very, very difficult. But the fact is, Rahul, as always I mentioned, that giving a call on the market, on the indices is wrong, is stupid, because you miss out on the opportunities. And I personally feel a lot of opportunities have been missed out by many investors. Some of them are regretting, some of them are now planning to enter the market. They are a little bit skeptical, and that's why you are seeing this market being a little bit lackluster today, because not many are convinced that the market will go up further from here. People are again waiting for the next fall to happen. So for the moment, I think 13.5, 14 times valuations, again markets have become on 2019 earnings according to our calculation. I think markets are not very, very, very attractive, but markets are not very, I would say, not very expensive either. So I think stock-specific, I think selection can be done even at the present levels.
Afternoon, Mehraboon. If we're talking about opportunities, how would you play the metals pack? It was beaten down so badly, and for the last 2 trading sessions, it staged a stellar recovery. In fact, the biggest index gainer today is Sterlite, up almost 5%. How would you play that pack?
I think, Shruti, I think the biggest positive for this market, if any, for the Indian markets, if any, would be if the commodity rally which we had seen over the last 2-3 years, I think if that breaks, number one, if oil comes down, because we all have believed that as inflation, interest rates, oil price, commodities prices, because of it there has been pressure on the margins of most companies which use this commodities as a raw material. So if this breaks, I personally feel it's going to be great for the Indian markets. So commodity stocks, I personally feel, could possibly underperform. We have believed that over the last 2-3 months, that I personally feel sooner or later this entire bull run which you have seen in many commodities, I think ultimately it should break, and it will break. And if that breaks, that could be a positive for the Indian markets in particular. So we are a little bit negative on markets like Brazil and Russia right now for the same reason, and possibly bullish on a market like India. But having said that, the factors, commodities coming back to it, obviously we are a little bit negative. The only commodity, if we can call it a commodity in the proper sense, the only metal which we are positive on right now is steel, because steel even today has a discount of about 1200 to 1500 rupees per ton as compared to the international price. So steel is the only thing which we are ready to look at.
One of the other sectors in focus, of course, today, Mehraboon, is the telecom space. How are you playing that? Do you think valuations are now looking attractive? We've seen about a 20-25% correction this year alone.
If you start looking at things that way, Shruti, I would possibly agree with you, but allow me to state that there are other reasons why we continue to remain a little bit underweight on the telecom sector. Because ultimately, as I mentioned, the market provides opportunities. At every level, there are opportunities in this market, and I personally feel telecom as a sector, especially the stocks in the sector, is going to underperform over the next 12 to 18 months.
With specific reference, of course, to the BSNL IPO, if and when that does happen, Mehraboon, how comfortable are you with that price band, especially 400 and upwards?
Well, it's too early, Shruti, to give it a call, but I personally, in one word, I can say it's a little bit ambitious, I would call it that way. And yes, if and when it happens, possibly we will see a possibly run-up in telecom stocks at that point of time. But otherwise, telecom as a sector, we are underweight, and BSNL, as I mentioned, one word, a little bit ambitious. That's what I feel as of now.
Have you taken a look at the IPO that's opened up today, Austral Coke and Projects, Mehraboon?
Very amusing, because I fully agree with the discussion which you all were having, that the timing at which the accusation has been made, I would put it that way, the press release has been issued, has a little bit, there's a big question mark over there. The intentions are for everybody to understand as to why it's happened. And allow me to state honestly, if in one sentence, I would just like to dismiss up both these companies and not bother to look at it.
What's your call on the commodity cycle at this point of time, Mehraboon? Because we've seen a lot of the global physical commodities at multi-month lows, whether it be copper, zinc has had a tough year. How are you approaching some of these non-ferrous lots? You've spoken about steel. What about the index beyond steel?
I personally feel that the commodity cycle, possibly that the bull run which we have seen in many commodity prices is possibly tapering off, is going away, and that possibly could be a very big positive for markets like India. So I think the commodity cycle, the bull run which we had seen, I think it's breaking off, it's cooling off rather, I would put it that way. So if the prices cool down a little bit further, I will not be surprised.
Specifically with reference to the auto space, Mehraboon, the reason I ask is because it's probably been the best performing sector over the last 1 week or so. Given what you saw in the earnings and given what you saw in the monthly sales numbers, how are you positioned on the sector here on?
At the present valuations, I think if people start looking at the traditional parameters, it will be very difficult for me to state that one should just sell it off. But at the present levels, especially in the last 3 days, what has happened to virtually all stocks in the automobile sector, the way they have gone up, I would call it that it all happened because interest rate sensitives moved up, because we are possibly coming to the conclusion, most of us, that inflation will peak out over the next 2 to 3 months. Oil has come down. So possibly the worst for this sector could be over. I think it's a little bit too early to state that. And after the run-up which we have seen over the last 3 or 4 days, with stocks going up by nearly 10 to 20%, some of them, at the present level, definitely I would not be induced to buy, or not be induced to even recommend anybody to buy the stocks, because at most, I think they will be performers, definitely not outperformers.
We've spoken a lot previously, Mehraboon, about the banking sector and the valuation differential between public and private sector. Over the last couple of days, practically every bank has come out and raised their PLR between 50 to 1%, 50 basis points to about 1%. How do you think the fundamentals are shaping up right now? Do you think that this passing off of interest rate hikes would actually keep margins intact and actually help the bank's performances going forward, or are there issues with respect to interest rates, widening spreads, which are now translating into mark-to-market losses?
I think if you look at in the entire banking sector, I feel the concerns still remain, Rahul. The only thing is that the concerns now are well defined. One really doesn't know as to how deep they are for the moment, but they're well defined. Everybody knows about it. And the fact is that they had come down a little bit too sharply also. I had gone on record, yes, about 2-3 months ago, I had gone on record to state that price to book value may look attractive, but they have reasons to be that attractive right now. And I think over the next 3 to 4 months, the bank stocks would be at the same levels where they are. And I had also mentioned specifically that if anybody has to touch the banking sector, it should be a stock like HDFC Bank, because I personally feel a 25 to 30% growth is definitely coming for that particular bank, and I have reasons to believe that way. But at the present level, if you ask me for the entire banking sector, again, it's a view which one needs to take. The view is that whether interest rates have more or less topped out, whether inflation is going to peak out over the next 2 or 3 months. If that be the case, I think if you want interest rate sensitive stocks in your portfolio, which I think is not a very bad idea, especially for investors who believe that they would like to be aggressive in this market, despite the reversals they would have suffered over the last 6 months. There are many investors who want to be aggressive. I think you can possibly take a look at bank stocks, but very specifically a stock like an HDFC Bank. But the fact is, yes, Rahul, over the last 7 to 8 days, they have gone up a little bit too sharply again, whether it's SBI, whether it's PNB, whether it's HDFC Bank, ICICI, they've gone up too sharply. So in this particular sector, I personally feel, having gone up nearly 10 to 20%, most of them, at the present levels, if somebody wants to buy, I would say he can possibly wait. But if he's a little bit too aggressive, too ambitious, possibly can take an exposure, but in select bank stocks.
Mehraboon, if we talk stock specific, how are you viewing a stock like HUL? It's been trending lower over the last few trading sessions. Do you think it still remains a defensive play?
I don't think so. Shruti, I personally don't think so. If you had asked me the same question maybe about 6 months ago or 9 months ago, when the stock was around 170, 190, 200 levels, I would have said yes. At the present level, I personally feel that HUL for the moment is definitely fully priced. And I think, again, Shruti, I would put it that way, that the market provides a lot of opportunities, and money is king in this market. And I think money, if you use wisely, I think bargain valuations are there plenty across various sectors. So HUL at the present level, I personally